Hello traders, in today's video I will tell you a very important concept which will help you to understand a major difference between a real breakout and a fake out. Because if you know how to spot a real breakout and a fake breakout, you can use that concept while trading and you can make a lot of money. I have 8 strategies based on the same concept. So first of all, I will teach you about the concept, how you can spot a fake breakout and a real breakout. Then I will share all these strategies so that you can apply them effectively. If you see my trading videos, you will find this concept being used so many times and you will see me trading with the same strategy that I will share in the upcoming time with you. So before understanding about how to spot a fake breakout and a real breakout, you have to understand what is break of structure, because this is the very important concept that will teach you, that will help you to understand the difference between a real breakout and a fake breakout. So in an uptrend, you will find price creating new highs by breaking the previous high and then creating another high by creating the previous high. And this simple concept is called break of structure. Whenever you see in an uptrend market the price creating new highs by breaking the previous high, you will say that this is break of structure. Now similarly, in a downtrend you will see price creating new low, breaking the previous low, creating new lows by breaking the previous low, meaning that this is simply a break of structure because price is breaking the previous low and it's constantly creating new lows. Now, once you understand what is break of structure, you have to understand why this break of structure happens. So let's understand it in an uptrend. So in an uptrend, the price is moving up because the buying orders are more than the selling orders. Similarly, the market is retracing back because the selling pressure is high than the buying pressure. Again, market started moving up and it breaks the previous high. What does it mean? It means the buying pressure was high again, and that's why this high was broken. Similarly, you will find the price going up again, breaking the previous high. Why? Because the buying pressure is high. So in a simple term, whenever you find that price creating new highs by breaking the previous high, we will confirm that the buying pressure is there and the pressure is real, and that is why market is moving in the upside direction. Price is creating new highs because the buying pressure is high. Similarly, in the downtrend, when price breaks previous low and creates new lower lows, it is a confirmation that the selling pressure is high than the buying pressure. So whenever you see a lower low formation, it is a confirmation that the selling pressure is more, the number of sell orders are more, and that is why the price is moving down to fill all these sell orders, because the buying orders are not up to the mark and the price needs to go down because all the buy orders have been filled, but still the selling pressure is more, and that's why it is breaking the previous low. So whenever there is a more buying pressure, you expect the market to go up. Whenever the selling pressure is high, you expect the market to go down. This is a simple concept. So I think you understand what is break of structure and why it happens. Let me summarize one more time. Break of structure happens in an uptrend because the buying pressure is high, which is an indication that market will go up. Break of structure happens in a downtrend because the selling pressure is high, indicating that the price will move in the downward direction. Now this is an important concept. Once you understand it, now you can understand how to differentiate between a real breakout and a fake breakout. Now let's understand what is a real breakout and how you can find a real breakout. So let's move on to the next topic. So let's understand it for an uptrend. Suppose this is our resistance zone or a selling zone where you expect that the selling pressure is high than the buying pressure and you can expect the market reversing. So for an instance, if suppose the price is like moving like this, it's breaking the previous high, which means more buying pressure. It is coming down, retracement goes up again, retraces back, and suddenly here you find a candle like this. For a normal trader, this is a breakout candle and he is expecting that now market will go up because this is a clear breakout candle. But it can be a trap and the next candle can go like this. But if you think you are clever and you thought that this is a fake out actually and it is not a breakout candle, market will reverse. What you do? You place a sell order because you thought the market will go down, but on the contrary, it was actually a real breakout, not a fake one, and you are trapped again. So in this case, what you can do? You can't do anything, and that's why I avoid taking trades on the first breakout, because this break can be a trap or it can be a real breakout. So what you should do in this case, you always have to wait for some retracement and you will not place your trade because the market is retracing and it is at the support level. Previously this was a resistance. As this is a breakout candle, most traders will treat this particular zone as a support. You won't treat this as a support because currently we are not sure if this candle is a breakout candle or a trap candle. What you will do? You'll wait for the price to go down, and after that you will see if the price is moving up again. If price starts going down, you won't do anything because then it is a confirmation that this particular candle was a trap. But if the price started going up, you will wait until this particular high is broken, because once this particular high is broken, it is a confirmation that yes, this particular candle was formed because of real buying pressure. It was not a trap, because once this candle broke the previous high, this is a clear case of break of structure. Once you have a break of structure, you now can go for a trade here, because this is a confirmation that yes, this is a real break of structure. So that is how you can find if it's a real breakout or a fake out, because once you have another break of structure after the breakout like happened here, this is a confirmation that yes, this is a clear breakout. It's been not formed by a fake volume or it's not a trap. Now, once you know that this is a real break, what you will do, you will wait for the price to go down, and then you will wait for the break from this particular high. Once you have a break, now this particular break was a confirmed breakout. It was caused because of the real buying pressure and it's not a trap. So that is how you can spot a real break. Now when it comes to fake out, what you will find is that the price will move here it can reverse instantly, or it can move like this. It will go down, then it will come up, and then you will find a wick like that. But you won't find any real break from this particular high. You will find the candle closing below, and once you have this, now you can't be sure if this is a real breakout or a fake out. You need clear break in the upside direction, then only you can expect that the market, the price will move in the upside direction. So that is how you can spot a real breakout. Let me summarize it one more time. Once you find a breakout candle, you won't do anything. You will wait for some retracement. Once the retracement is over, you will wait for the market, the price to go up and break the previous high of the breakout candle. Once you have this, you can be sure that this is being caused by real volume. Now, one more thing which is important, you have to be very careful, is that this particular candle is a breakout candle, but you will find sometimes that because this is a real breakout, you won't find market reversing, but it will keep on going up. But at some point it will retrace back, and once it start retracing, then only you will wait for a clear break of structure. Once you have a clear break of structure, you then can be sure that market can go up. So this is an example of candle. Let me explain you with a line chart. So suppose you have this breakout. Now breakout can happen in so many ways. Like it can be this long breakout, then market can retrace back. Market can go up to this level, then it can retrace. It can go up to this high and then it can retrace. All in all, until and unless you have a retracement, you won't treat the high as the breakout scenario, which means that if this candle, if the market, the price retraces from this zone, you will treat this as the resistance and then wait for the break of this resistance to confirm a break of structure and a confirmation that yes, this was a real breakout. Similarly, if the market goes up like this and it didn't retrace back, you won't mark your resistance till then. After the retracement, you will mark this as the resistance, then you will wait for the clear break. Once you have clear break, this is a confirmation that the buying pressure which was here, which causes this break, was actually a real buying pressure, and that's why you can trust this breakout. This is not a fake out. So that is how you can spot a real breakout, by waiting for another break of structure in the upward direction. And let's understand this for a downtrend now. So in a downtrend, suppose this is our support level and we have market moving like this, and you find breakout. What you will do, you won't place your trade here because it could be a fake out, a trap. And to confirm it, you will wait until the price starts retracing back for some times. Once the retracement phase started, you will draw this as the support, then wait for a clear break. Once you have clear break, this is now a confirmation that this particular selling move was not fake, it was not a trap, but caused by real selling pressure. So once you have real selling pressure, then you can apply your strategy according to the direction which you wanted to trade. Now, I think I have explained you the concept. Let me summarize it one more time. You need second breakout after the first breakout to confirm that yes, this is actually a clear breakout. Like in this case, this was the breakout, but we didn't place our trade at here, here or here, because we were not sure if it is a clear breakout or a fake out. We waited for another break. Once the market start retracing, we mark this as the support. Wait for the price to break. Once the price broke, you will then place your trade, which means that you can only place your trade after this particular level. You can place your trade here, here or here. You can't place your trade at this level and not on this level and not on this level. You will give market enough time to retrace back and give us another break. You will do that in both cases, the uptrend as well as in the downtrend. I think I have explained you the concept in detail. This concept is very important. Now, one by one, I will give you strategies which you can apply while taking trades. I will give you total 8 trading strategy based on this simple concept, and you will find them working 90+% of the time. 4 trading strategies will be based on 5-minute expiry and 4 will be based on 1-minute expiry. So those who love 5-minute trading can apply the same concept and can make profit, and those who love 1-minute trading can do the same. Now I want you guys to go on the chart and try to apply the same concept, and then you will find that yes, whatever I'm telling you is working 90+% of the time. Whenever you find second break after the breakout was actually a real breakout. And when you find market failing to break the first breakout high or low, in this case this is the low, when you find the price failing to break this particular low and it is reversing, in most cases it is a fake breakout. So now you know what is fake breakout and real breakout. I want you guys to just read chart based on this concept. Until then, just wait and relax, because I'm going to give you strategies. I will give you 8 strategies in the next 3 days which you can apply in the chart. So that is it for today. We'll see you very, very soon.